I am indeed standing by with the CEO of the Industrial Development Corporation, and it's quite important and pertinent that we speak to him at a time of global crises where international development assistance to Africa has declined by more than 1/5. And we're also seeing the lender of last resort, the IMF, somewhat cash-strapped despite a recent cash injection following the G20 summit. The question is, how do we bolster and boost industry in Africa using local channels? And this is where the IDC comes to the fore. Geoffrey Qhena is with me now, and recently in a State of the Nation address, the President of the Republic of South Africa made mention of the fact that the IDC is going to play a much more prominent role in providing loans and some sort of financial support to key sectors like manufacturing that's distressed at this point. Are you ready to play that role?
Thanks, Loretta. We are indeed ready. I think we understand as a development finance institution, it is our role to come in and help stimulate the economy. I mean, we have to do it by creating new opportunities, new industries, new companies, but also at the same time intervening and assisting those companies that are finding themselves during this crisis going through a downturn, which is temporary in nature. I mean, we think it will come around, but we have to assist them. Yeah, so we are indeed, as much as we are also affected because we've got investment in some of those, but I think with the reserves we've built over time will come in good stead now.
For how long do you think you're going to be expected to play this role outside of the mainstream of the work that you do? Do you think that we'll ride out the global economic crisis and then there'll be less expectation on the IDC? Or do you think because South Africa has increasingly become a developmental state where development financing is a critical component of how businesses are managed, of the industrial policy, that your role is prolonged?
I think there's two parts to your question. Firstly, I think the crisis, we think it will find itself out next year sometime. So we're hoping it will be a 2-year intervention. We've set aside some resources for that. But as far as playing a role as a development finance institution, that's the reason why we exist. So I think that will continue. I think the emphasis on development and job creation, it's something that we've always embraced. So we're expecting to do more. We expected to do more. I think that's why you have development finance institutions.
How do you measure risk and price risk? Because I know that some of the organizations you're expected to help out are the utilities who have been downgraded by international ratings agencies and are battling to source credit on international bond markets. And this is where you're coming in to play some sort of role. So how do you assess the risk when international financiers won't even touch them?
I think we're fortunate in that IDC has been in existence since 1940. So over time, we've established good knowledge in terms of the different sectors that are there. So we know what drives those sectors. But naturally, one has to look at the people who are driving the business. I mean, it doesn't matter what good advice you have or good businesses you have. If the management is not up to it, that's the problem. Obviously, we'll continue to look at the markets where those businesses find themselves and their technical ability to deliver that service. Because, I mean, if they don't deliver the service, they don't have a problem. So the experience we've had over time will help us to do that. But we have to understand the business. So, but I would like to believe we have the processes to be able to fast-track that process. It's not going to be easy, but yeah.
And what about your exposure to the risks? Because essentially, I mean, you're not a charity.
No, we're not, because we also go out into the market. Fortunately, we have good relations with other development finance institutions, and they have enabled us to be able to access funding even during these difficult times, because we know in some of the traditional markets it's been difficult. So we are affected. I mean, our balance sheet has also shrunk, but I think because we've had good reserves over the previous years, we still have the muscle to be able to do some significant input here.
And your outlook for the South African economy, now it's official, we're in a technical recession, contraction of 6.4%, unemployment rates rising over 23%, joblessness right now an additional 200,000 people. Although the government has this huge infrastructure program of over 700 billion rands, there is a sense that we just cannot ride the crest of some of the previous successes of growth.
If we did not have this capex and the programs that we had initially, I would say the situation could be even much worse. Obviously, we are affected. That's why we're in the recession. I mean, we have a number of companies that export, and South Africa does also rely on exports. So we'll be affected, and I think it's time for us to reflect. It's going to be difficult, but I think we will be able to come out of the storm. I think the fact that we're also having 2010 next year also is helping really to boost that. I mean, we're seeing a number of people coming into the country. They're coming for the Confederation Cup now. They came for the IPL. They're coming for the rugby, and they're coming in for the World Cup. So, I mean, if I look at the price they paid for a soccer player in Europe, so that means then there is still an opportunity for people to, even in these difficult times, to still enjoy the sport. Yeah.
Where do you think the major upswing is going to be, just sectorially speaking? Because mining is the backbone of this economy. It's been under distress, though we've seen the price of gold and platinum improve somewhat. We've seen major retrenchments there and industrial action. Manufacturing constitutes 1/5 of South Africa's GDP. It's in the most distress, especially within the automotive sector. Agriculture, for the first time, has started to be a positive contributor to growth, but it's a very small sector. Where do you think the opportunities lie?
I think the opportunities will lie still in the mining sector. So difficult as it is, I mean, the companies that we're investing in, we're seeing they're starting now to, some of the furnaces which they closed are starting to bring them up to speed. So it will take a little bit of time, but I think agriculture is, I mean, as you've said, I mean, it's small as it is, but one must remember the implication it has on other sectors. So that will also be a positive one. So I'm seeing that tourism naturally, because of the events that are happening. Yeah.
So you're upbeat?
Yes, I am.